Hi, my name is Joe Park. I'm CEO of Horizons Stewardship. I want to welcome you to our webinar today, Cash Flow Management, Rebudgeting, and Financial Strategies in the Midst of Uncertainty. I'm thrilled to have with me today a co-presenter, Stan Reiff. Stan is a partner with CapinCrouse Accounting. They are the largest accounting company in the United States that deals with churches and nonprofit organizations. Stan, as always, love having you back.
Great to be with you again today. Always love working with you to share the good news and good opportunities and how to help churches and ministries maximize and steward the resources entrusted to them for greater ministry impact.
Well, we're starting off your slide deck today here with a verse from Proverbs. You want to set this up and get us rolling?
Sure. So, certainly, as Joe, we've talked before, I have the interesting split personality of being both clergy and a CPA. I'm not sure how that happens, but with that, it's easy sometimes to get caught up in the numbers or lose track of why we do the numbers. Sometimes we want to talk and segregate the sacred from the secular, and my worldview tells me it's all sacred. And so here, the wisest man that ever lived tells us that the plans of the diligent lead to profit as surely as haste leads to poverty. And there's having worked at Crown Financial Ministries for over a decade, spending time with Larry Burkett and Howard Dayton, there's over 2,500 verses that speak about money and finances and resources. So it's always a great perspective to tie in what we're getting ready to talk about today within the biblical context for churches and ministries, because they aren't polar opposites. They actually go hand in hand, and we'll take the time to be diligent to steward the resources that God has entrusted to us. We will have enough to do the ministry that God's calling us to.
So let's move on to our subject today, cash flow, PPP, forgiveness, rebudgeting, and financial strategies. Stan?
So, Joe, when we start talking now very specifically about our church or our ministry, one of the most important things we need to do in a time of disruption, if you will, and again, let me make this a broad conversation, not just around COVID, even though that's what's relevant today, but for several years now, I've been lecturing and teaching across the U.S. around how many blizzards can you go as a church and still survive not having an offering? How many hurricanes can you be closed in weeks in a row? Can you be closed for a hurricane or a tornado, or just list the natural disasters, if you will, or weather conditions that will cause a church to be closed? Well, certainly now, across the U.S., we're all feeling multiple weeks being closed. And so one of the first things to do is you want to preserve your cash, because that's what allows you to stay open indefinitely, or at least a longer period of time. So what we're going to talk about really in depth today is managing and monitoring your cash and your cash flow to ensure that you can stay around longer to not just survive the current pandemic and its implications, but be in a position to thrive on the other side. So with that, we want you to really monitor and know where you're at financially. You need to be tracking your income on a weekly basis. And many churches are already doing that. Ministries certainly do that. And if you're not, it's not too late to start. It's, certainly churches have a very easy way to do it, because we have Sundays where, if you will, we have a captive audience doing the giving. And then if you're doing online giving, that's normally very quickly associated with a weekend as well. So we're going to go through some of these in a little bit more depth here pretty soon, where we want to track our weekly income. We want to track our weekly expenses from a cash perspective. We want to then really start measuring our weekly surplus and deficit to know, are we bringing in more money this week than we are spending, or less, and try to tie those together. And then we want to make sure we know how many days of cash we have on hand. Well, these are some key dashboard metrics that you should be monitoring as a church or as a ministry on a weekly basis. And so with that, let's go right into some of the calculations. So when we start trying to figure out what's our daily cash need, this slide here is actually an interactive template that will be available for you to download and use. But so we have it set up generically where you can put your own church name, your fiscal year, But then the key points are if you on your budget, and if you look within the box is the actual template. To the right is that sample data input. So we're illustrating, there's 4 data points that will give you the information you need. So what are your total budgeted expenses for the year? And for our example, we said we have $500,000 worth of expenses for the year, total from our budget. Then we want to add in the annual debt service. So this would be the principal. If you're not calculating it this way in your budget already, where if you're looking at the principal of a mortgage only as a balance sheet item versus a cash item, you'll want to add in the principal amount of those mortgage payments into your budget as an expense versus just a balance sheet item. Then we're going to subtract out your depreciation expense, because even though that is a legitimate expense, it's a non-cash expense. And that gets us to the sum, if you will, of $444,000 of cash expenses. So again, we start out with the $500,000 as an example. We're adding in $23,000, which would be the principal reduction on your mortgage note. And then we're going to subtract out the $79,000 of depreciation expense to get you that cash expense. We're going to divide that by 12 months. And then you've got that much cash on hand, would be $74,000. And so then now we're saying that we have 2 months of reserves in hand. So if we can have any more money come in, we would have at least 2 months available for us before we ran out of cash. That's a critical number to start with. And then we'll talk about how that plays into the next piece here. We want to make sure we're comparing our year-to-date giving week by week. And again, that's a critical refinement versus just by month when you start measuring in the time of transition, because every data point now gives you an extra indicator for trend management and analysis. So you want to measure, again, we always suggest weeks 1 through 52 for a church or a ministry. And then you can certainly put your banding around that for months, knowing when they fall. Some months having 5 Sundays, some only having 4. So once you, the next slide then starts showing how we actually create that cash flow template. So we're going to start at the top, and we're going to put our beginning bank balance in of available cash to us.
And again, this is an interactive slide. It'll be in your slide deck, so you can take this and set up your own cash forecast template.
Absolutely, Joe. So we'll walk through this, but this is, like you're saying, available for everybody on the webinar to use if you don't already have a template like this. And then you can still, again, we're showing some additional refinements here for you. You can keep it more simple and just have just a total income per week. But we wanted to refine how much is coming online, how much is in the mail, how much is ACH, and other cash flows. So you can track those on a weekly basis to see where the money's coming from, if there's any substantial changes taking place, and what you might need to do to be more specific for an intervention, if you will, or response to those changes. You'll get a total cash inflow coming in. So starting again at the top, you've got your cash balance available at the bank, the amount of money coming in that week, and then all the expenses by category. You have your fixed expenses that don't change, and those are pretty much your mortgage, insurance, leases, and they're just predictable, same amount all year. Then you get into your semi-fixed. These are things you have to spend, but there's a little bit of variableness. That would be your utilities. It could be some of your payroll, some other facility costs that are part of those contracts. And then at the very bottom become those variable ones, which many times are the ministry component. And we're going to really spend a lot of time on these a little bit later. But then you get your total expenses that are added up. And then at the end, you get what your projected ending cash balance is, because you've started with the beginning, you've added your income, your contributions for the week, and then you look at your expenses for the week, and then you're finding out if you're adding or taking away from your balance. And now between this slide and the previous slide, you'll know how much cash reserves do we have, and how much burn rate can we afford before we run out of cash.
So Stan, who are you suggesting that that information be shared with?
So certainly, your accounting person should be creating this. Our recommendation is you certainly want to have your senior leadership team at your church, and I would include strategic board members who understand the business side of the church.
So start us off here. We're moving from cash flow projecting now to budgeting.
Okay, so again, the cash flow projecting that we've indicated that you go through will then provide you with what's available and how do we maximize the variable expenses that we have to us. Too many times when we look at our budgets, we actually do plan for a whole year. But when you have major disruptions, that no longer matters. So back in the fall or January, when we set the budget for this year, none of us knew that our churches would be closed for 8 to 10, 12 weeks. That changes everything. Well, even now, we aren't always sure when we can reopen. That's certainly very geographic centric based on the location. If you're an urban church or a rural church, if you're in a state that's been minimally impacted by COVID versus one who's been deeply impacted by COVID, we may or may not know, and then we still don't know. Certainly there's been rumbling that COVID may come back. We have to shut down again.
So the key here is to be moving from a static, we start the year, we work with the same set of budget points, to being more flexible, revisiting that as you move forward based on your realities and how things are changing.
Absolutely. So then again, just in summary, this is just a template, as a highlight summary of the previous interactive spreadsheet that everybody will have access to. But again, you'll see the flow where you have what your income is by week, you have your expenses for that week, and then you have a surplus or deficit, what your cash was and what the resulting balance is. And you can see on that bottom line, we started in week 20 with $600,000 or with $300,000 available, and then we added $300,000, and I simulated this to be maybe that first week before COVID was starting. And then you can see over the next 3 or 4 weeks, a little bit of a decline with a little bit of a bump and the resulting ending balance. And so the runway to continue operating the way you have been as a church has gotten really, really short. So again, you can see why this weekly interaction will help you monitor, make decisions before, while you still have time to pivot and make changes in your programming and expense reduction or revenue enhancement before you run out of time. Then here's just, again, just an example that we threw in. This would be, almost before COVID, where, the sample we're using here would be basically from January through about the middle of March. You can see the beginning bank balances, just like we showed you in the interactive spreadsheet, along with the various income coming in from different streams, your expenses, and then you can see your projected cash flow balances, which then give you an indicator of how many weeks of cash you have available if something changes, so you can actually be strategic and visionary instead of just reacting to a crisis and not being able to get ahead of it.
That brings us to the whole issue of rebudgeting. I think it's fair to say that what we started out with as a ministry plan for 2020 in January looks significantly different than it does right now. And so the suggestion that CapinCrouse has, the suggestion that Horizons has, is that we go through a rebudgeting process, looking at the remainder of the year, taking shorter periods of time and focus on those. So neither Stan nor I are imagining that you're going to sit down in June and come up with a July through December plan that's going to be perfect. There's going to be too much like the PPP loan. There's going to be too much unfolding. We don't know when the vaccine's coming. We don't fully know what's going to happen when churches begin to reopen and regather for in-person worship. So we're wanting you to take, in terms of your cash, in terms of your financials, a shorter look that you are revisiting, looking at those weekly, monthly, quarterly, and adjusting those based on the kind of ministry you're doing. Now, what I'm going to be talking about is stepping back and rethinking how you are actually doing ministry. Isaiah reminds us not to dwell on the past, but to look forward to the new things that God is doing for us. And so what I'm going to be talking about now is really rethinking the way we put together our ministry plan. So the questions that you're going to have are, where are you seeing God working, and how can your church participate in that? So the only way you can really realign your budget is to realign your ministries, and that's going to bleed into what your financials are going to look like. So I want to just talk to you a little bit up front about the cost of change, the cost of growth. It will involve loss. Jesus talks about that in John 15 with the vines and the branches. The gardener, their God, prunes back those things that are not fruitful so that those that are fruitful can take place. And so the thing that both Stan and I would be horrified to hear is that a church looked in and said, gosh, we're experiencing some financial difficulties. Our giving's down 9%. So we're going to cut our ministry spending by X amount across the board. That sort of thinking has been common for many churches in the past, but it is not going to help us to live into God's future. Peter Drucker talked about that as purposeful abandonment. The first step in a growth policy is decide where and how, is not to decide where and how to grow, but to decide what to abandon. And that is a line of thinking that has not been common for us. So I would encourage you, pastors, if you're listening, lay leadership, if you're listening, to begin to have conversation with staff, with your church leaders, your church ministry leaders. Sometimes those are intertwined, but not the same sets, and your financial leaders, because if you are going to thrive in the future and really embrace what God has in store for you, you're going to have alignment with all three of these groups. So I'm going to take you through some questions that will help you prepare. Horizons has created a ministry funding guide for stepping into what are the things you need to be doing right now as a church, given the unsettled circumstances. You can download that at Horizons. We can talk about that later. But the fifth point focuses on these things, and we'll go into them in more detail. So the first question is, do we have the right mission and vision for our church? Can we clearly connect life change, which is a measurable evidence of ministry impact, with the mission and vision we have for our church? Now, one of the big challenges that churches tend to do is say, you know what, we need to revisit our mission statement to get that in alignment with what we think God is doing. And so everything stops for 6 months while a team works on that. We want those conversations to move forward, but you're probably not in a position to just stop and wait for some team to do some fine wordsmithing on that. So what we're talking about is doing some of these tasks in parallel. So if you're going to be revisiting your vision and mission statement, you still have to continue with the transformation of the church. So the next question is, can we clearly connect the activities that we are doing in our church with ministry impact? Can we measure those things? And what I'm talking about here is essentially maybe putting together a team that assesses the major ministries that you have going on in your church. Let's just assume that's a 12-person team that you've got that's working on this. And so you would be looking at each ministry and scoring that ministry maybe on a scale of 1 to 10, the return on human and financial investments that your church is putting into that. When you have a group like a dozen people who tend to do that, you're going to figure skating or gymnastics, you're going to have a variety of scores, but it allows you to identify those ministries that are most fruitful, those that are less fruitful, and those that are not very fruitful at all, so that you can reallocate both your human and financial resources. So when you're looking at those, you're asking the question, what needs more human and financial support? What is God blessing? What amazing things are we doing today that maybe we weren't, that we need to pour more into? Maybe in that middle group, you're saying what needs to be adjusted in their purpose, process, or funding to make that more fruitful, or to be a better return on your investment. And lastly, what do we need to stop doing that we were doing in the past? This is the most critical step in this process. And we're going to talk a little bit more about the courage that it takes to accomplish that. Other questions. Do we have a clearly articulated theology of generosity? Do we understand what we're asking people to do from a funding perspective, from a generosity perspective? Have we come together and written this out? When Horizons is doing coaching, and a majority of our work right now is with coaches helping churches, helping them with their annual special giving rather than capital campaigns. We're starting with that mission and vision, and we're moving into the theology of generosity. So this is just sitting down and saying what we believe the Bible says of ask of us in terms of being generous. And this is important because communication is so important to the kind of adaptive change that we're talking about here. So for your communication teams, they would use this like a style guide to ensure that all the communication that is going out from the church is aligned with the theology of both human and financial generosity. Have we made generosity a core of our disciple making process? That's the mission of the church, is to make disciples who will then transform the world. So our work, if we don't have a clear discipleship path, we need to set that in place so that we can be effectively measuring movement along that discipleship path to tell us if we're doing our job as a church. And if we're not calling out generosity as one of those critical waypoints, then you're always going to struggle with funding and resourcing your ministry. So churches with strong giving habits tend to also call out generosity, both of time and talent and financial resources in their disciple making process. Are we inviting our financial leaders into the vision and strategy process? I talked about this as one of the groups that it's critical that you all have conversation with, because in most churches, financial leaders are the 5 to 7% of households that are funding 35 to 50% of your ministry. If you move away from what they're willing to participate in fund, then you're going to struggle, one, with funding. The other thing, if you don't involve them in the conversation process, is many of these people are rich in knowledge and skill to help you with that process. Some of the folks that are most gifted in these areas are not willing to sit on church boards or lead ministries, but if you invite them to participate in ad hoc, short-term projects, maybe to help with the rebudgeting process, you can get some very wise people to serve you well there. And the last is, are you confident in your ministry funding strategy? This is the outcome piece of the Horizon coaching around year-round generosity strategy, is putting in place a funding plan to support your ministry plan. And the question is, do you have confidence in that, or do you need some assistance? Then it gets down to building consensus around the plans that you're going to be putting forward. And now we're talking about adaptive, not technical change, meaning your church probably doesn't exactly know where it's headed. It doesn't exactly know what this is all going to look like. And so you're really working off a compass instead of a map. So it's very critical that you use those flex budgets that Stan talked about, and that you keep your church informed, starting with getting your staff aligned, your church leadership aligned, your financial leadership aligned, and then aligning the rest of the church. So do you have a good communication plan that is sharing what you are doing and why you're doing it and what your outcomes will be with your congregation, so they are with you in this process, and you don't just spring upon them, we've got a new plan, a new budget for a new day, and they didn't see that coming. One of the few tactical things you're going to hear me talking about today is this leveraging of offering talks. They are one of the most powerful opportunities that we have in churches today, and very few mainline churches do these well. When we work with churches that have high levels of mission funding, meaning there are high levels of generosity based on the financial capacity of people in that church, they are giving high percentages of their income to the church. There's a huge correlation between successful offering talks and high levels of funding. And what we're talking about is not begging people for money 52 times a week. It is really telling the impact of your story and inviting people to join God in what God is doing in your midst. It is an opportunity to talk about how you operate your church with fiscal accountability. In Giving 365, you can download webinars on how to do good offering talks. And then with change comes resistance. Courageous leadership is required. If the words adaptive change are new to you, if courageous leadership is something that you want to study on and prepare for, I would encourage you to read this book, Canoeing the Mountains. It is one of the finest compilations of the latest research out there. It's written by a Presbyterian pastor, Todd Bollinger, and he has done a great job of using the analogy of Lewis and Clark exploring the West and what it looks like for the modern church to live into God's best plans. And one of the things that he says is expect sabotage. Don't be naive about this, whether it is passive, it can come from our supporters, but expect sabotage. And so how to deal with that is covered beautifully in that book. And one of the last things that we fail to do as a church is to celebrate those things that we're letting go of. If you are going to embrace God's future, almost certainly you're going to have to let go of some of the things that you have done in the past that have been successful and fruitful programs. What I'm encouraging you to do is, when you determine there is something that needs to be stopped, instead of just sort of cutting that out of the budget and quietly sort of sweeping that under the rug, do the opposite. Just say, listen, as we are transforming and living into God's best future, we are redeploying assets. And one of the things that we are not going to be doing in the future is this ministry. But this ministry has brought great fruitfulness over the past. We want to celebrate the leaders that were a part of it. And while it may not lead us to where we need to be in the future, was important for us to get here today. And so we celebrate that. We put that out there because there is grieving that will go along with the loss, and you're appropriately allowing persons to grieve. In the rebudgeting process, there's some best practices. It's a great opportunity to adjust your stewardship language, to adjust the how you communicate, to do away with budget. Nobody wants to fund the budget. Operating, if you ask people under 50 how fired up they are about funding the operating budget, you will not find much enthusiasm. So creating ministry funding plans, at a minimum, a ministry budget will help people connect what you are funding to the life change that is in your ministry plans. It's also a great opportunity to align your ministry year with your funding year. Most of us in the church today, we start our ministry years in August or September, and we launch out with a year's plan, and yet we've only budgeted that to the end of the year. A very, very widely embraced process among churches that are rethinking their ministry spending plans are putting those together, changing their fiscal year so their ministry funding plan, their ministry spending plan tie to the same dates that they launch their ministry plan, which may mean a fiscal year that begins in July, August, or September. There are a lot of advantages to making that change. If you look in Giving 365, there's a video that talks about changing your fiscal year. It's aligning your ministry spending and your ministry budget. That's a great tool that you can send out to leaders on your finance team and others in the church to understand what some of the benefits are to you. I've already talked about revisiting your spending plan for 2020. A couple of just really obvious things. Your mortgage rates are falling. If you've got debt out there, this is a great opportunity to go see your lender to reduce the interest rate on that debt. In 2008 and 2009, where we saw a contraction in giving to the church, capital campaigns around debt service became very popular, were embraced by churches. This may be an opportunity for you as you move forward. Look at your reoccurring expenses. There are things that are being charged to your credit cards that you are paying. Make sure that those are still bringing you the fruitfulness you want. And here's something we can't avoid. When you change your processes of doing ministry, you are going to have to realign staffing and funding around that new process. So this gets back to there will be some loss in most churches as you realign those resources. So that was a mouthful, Stan. I'm going to ask you to talk a little bit about monitoring to giving, and we're going to look at some of the ways you can do that.
Thank you, Joe. And let me just segue back to your comments just now. God really has given X amount of people in every congregation that spiritual gift of generosity. It really is. And as I've studied it over several decades now, I've come to understand that the majority of individuals that God gives the gift of generosity to, he also gives them the gift of making. They have the ability to make a lot of money and be incredibly generous. There are some who inherit wealth and are very generous with it, but it's amazing how many are entrepreneurs, executives, professionals who have this ability to make and understand the limiting of the resources for themselves to be more generous and sacrificial. And so with that, I want to use that to step into this part about monitoring. It really is important to monitor the giving units in your congregation and their giving capacity. And Joe, I know we're going to go a little bit deeper in that. So this is just more of an overview. But you want to really understand, who's giving at a larger amount, who's giving at a smaller amount. Every gift matters, but every gift has a little different impact. And so you want to really understand that and segment that. You want to look at who's giving that may be a member or a non-member. And certainly as you're building this out, especially now with all the, if you've been doing online services, you've had new guests attending your church online. What are you doing to disciple and bring them into your congregation even digitally, and helping them and acknowledge those new gifts during this season? So all these are really, really important. And because of that, you want to start looking again at these levels, but you want to make sure you're monitoring those who have been giving and how now have stopped. That's always an indicator for discipleship to understand, did they lose their job? Is there a health crisis? Or is there a friction point between them and the church somewhere? And here's what we know from our studies is people leave the church with their wallet about 6 months before they leave physically. So let me restate that. People's wallets, checkbooks, credit cards leave the church about 6 months before they physically leave the congregation. So these are indicators to understand what's going on. And many times they've stopped giving because there's an incident that the church could help them with, and the church is unresponsive because they're unaware. So that's a critical piece. And again, this banding here starts giving you some indicators for some of this analysis and how you may want to respond appropriately to the different individuals, and knowing how many are in the various categories. And each one has a pro and a con with it. For example, those who are able to give you larger gifts are those who are giving out of maybe year-end profits or other kinds of business activities. Those who are giving at a different level are those who have reoccurring paychecks and have the stability of employment. And so economic swings in the general economy will affect your major donors differently than it will those in employment. And so understanding where your congregation is, how they're giving makes a world of difference. Joe, you have some additional comments on that?
So in Horizons teaching, we use this band analysis, and I'm sorry, for whatever reason, it doesn't appear to be laid perfectly against the screen projected right now. But we call giving units those givers who give over $200 a year. When you're doing analysis around giving, if you take all givers, it's going to skew your analysis, because what you're going to find is that on a national basis, about half of your givers give less than $200, and they total less than 5% of the church's giving. So one of the things we want to be measuring effectiveness is the thing that the church has really got to improve on, where we spend a lot of energy at Horizons and helping churches do this. And we want to be measuring movement along the discipleship path and moving along these different giving bands. And so I'm going to give you an example. This is actually using a church analytics database called Mortarstone. We also work with another group. If you're interested in analytics, you can reach out to us on the website, and we'll be happy to talk to you about that. But you can see this is an actual church where they've got 321 band one givers that only give $22,000 over the course of the year. So in this case, 22% of their households only give 0.5%. So this is why we think for the analysis of giving, you want to carve that band out. I'm not saying you don't want to have a development strategy for those givers, but to see if you're really moving, that's not helpful. I also want to bring you back to those financial leaders that Stan was talking about. In this church, they've got 124 households that give over $10,000 a year. And those 124 households, out of the 1,500 giving households, out of the 3,000 total households in this church, just 124 are funding right at 44% of the budget. So here's an illustration of why those financial leaders are so important to your conversation, to make sure that they are on board with the changes that you're making, or at least that you've given them the opportunity to get on board. It also allows you to stratify your development strategies to help grow these different groups of givers based on where they started. So you wouldn't send the same message out to everybody. This is one of the ways that you can stratify those. And just from the perspective of using church analytics, one of the two tools that we use here. If you click on any one of those number of households, it brings up a list of those households. You can then click on a household and drill down and look at their 5-year giving history. So they can be very powerful in helping you with that. So we're also big believers in financial dashboards. Here are some of the ones that we capture. These are shown by year. You can capture those. You can see the trends by weeks and months. If you're using one of the analytics products, it will do that for you. Per capita giving by week, looking at your total number of givers, the number of giving units you have. So the comparison between the two. the number of new giving units that you're taking on in each period, those lapsed donors that Stan was talking about, who has not been a giver in the last 90 or 120 days that was giving in a systematic way before that. That will allow your pastoral teams to go out and see what's happening with that family. The donor churn, what's the turnover, and what are you retaining and what are you growing? These are dashboard pieces that you can hand calculate yourself, or you can use an analytics program to do that for you. But these tell a story. And so again, part of the coaching we do is to help churches to learn to read what is happening in these stories, because when I look at it, it tells me what the trends are in that church, the positives and the negative trends, just like a mechanic when he looks at the codes when he plugs into a car and he gets all these codes. That means something to her. It doesn't necessarily, it takes some training to do that. So Stan, you want to talk about monitoring expenses?
Absolutely. And Joe, just to reinforce what we just discussed about, the donors and the giving levels and whatnot, I've been around church long enough that sometimes, we get a little bit nervous about, should we be doing this analytics and, and trying to measure this out. And yet Proverbs tells us that know the condition of your flocks.
Yes. Yes.
Because wealth is not forever, it is fleeting. And that, again, helps us understand which flocks are in which categories and how are they and how do we best minister to them based on their giving levels and ability to give and its impact on the congregation. So there's a biblical mandate around stewarding what God's entrusted to us as these families and their ability to give and fund the ministries of the church. So with that, let me segue right into monitoring these expenses. Again, we talk about your fixed costs, the things that are reoccurring every time. It's kind of hard to get rid of your mortgage. You don't just decide you're going to move out of your church. These are long-term decisions that take time. So those are your fixed costs. They are what they are, and you need to see if they're changing. So Joe, I love the fact that you're saying, hey, interest rates are dropping. You might want to look at refinancing. And certainly if you have any kind of interest rate swap, if you have any kind of variable arm, you want to look at those and lock in, or make sure you're getting the best deal for your church right now. We get into some of these indirect expenses and the variable expenses. You really want to study these. And when times are good, it's easy to get a little bit lazy and not pay attention that we're over budget. And right now is not a time to go over budget. And if you find yourself in a category, and let me be relevant, as we're reopening and coming back to church physically, there are new expenses that we've never had before, with all the cleaning, the sanitation, the deep cleaning, and the way we have to do church coming as we reopen. Those are new expenses. We can't just go over budget because that's what we have to do to open church. We have to cut something else out so we can cover these new demands and how we worship together as we move forward in the weeks to come. So these are some critical things to look at moving forward. Now, I know there's been some questions already coming in about trying to understand different analytics and where should we be, and we're going to cover some of these as we go into the next section here. But you certainly want to look at your salary and benefits and your facilities. And as a general rule, your two big buckets of expenses as a church are always around your facilities, what we would call your occupancy costs, and your salary and benefits. And combined, we would suggest for most churches, generally speaking, obviously if you're a church plant or if you're maybe an urban church, there's always some distinctives there, but as a general rule, we would say you need to stay below 70% of that combined salary, benefits, and occupancy or facilities costs. Otherwise, you just don't have enough money for ministry outside the church and into the community, missions, and otherwise. And you don't have the margin for variableness in the seasonality of giving, economic downturns, or any other uncertainty that may play into it. So as far as being able to save money and set it aside for a future period, which is also a biblical mandate. So within that, some churches have a theology or a philosophy of, we want to only use staff position to manage teams of volunteers. And so if they're a skeleton crew. Others say, no, we're really into having, if you will, professional staff, clergy, and staff on payroll to do a lot of this ministry. The combination there, it still has to be, we would say, 75% max of those two combined.
What you're really saying is you need at least 30% of your giving to do ministry to be effective. Tony Morgan, who leads the Unstuck group, does a lot of research, and churches voluntarily participate in a survey. His most recent one showed that churches that are growing have staff in the 40% range. That's what they're expending on staff as a percentage of their giving. Churches in decline are averaging around 65%. So there is a direct correlation between staff expenditure and growth, and that has been consistent for a number of years, and it is one that is highly correlated. So if you're a church that's spending 60, 70% of your income on staffing, you, interestingly enough, may find yourself being staffed for decline rather than for growth, statistically speaking. Now, every context, of course, is different.
Absolutely. We would agree. We would say 50% is when we start throwing the caution flag with our clients. So absolutely. Talking a little bit about dashboards, and certainly, Joe, you've already shown a few. There's a few more we would like to talk about, but what we want to do, dashboards is really just taking a lot of data and converting it into meaningful information and taking a lot of numbers where your eyes can glaze over, and maybe create an infographic, if you will, or something, a pictorial illustration of what does this data mean, and how do we want to make decisions around that. So with that, we'll go through and we think that these dashboards will really help you measure your financial health. And I know we've had several questions come into that. So how are we doing compared to other ministries? There's certainly a lot of dashboards out there for that. We will look at how you're using your resources effectively. Certainly, we talk about a variety of ratios, including how much, we would always recommend a church at a minimum move towards 30 days of operating cash in the bank as a minimum. Now, if you're not there, and if you're below 2 weeks, your runway is really short for any changes in giving or seasonality. So if you're at 2 weeks and have a goal to get to 30 days, healthy churches, we have found, are right around at least 90 days or 1/4 of cash reserves to move away from being reactive to being strategic in their thinking. And so that would be one of the things we would highly recommend as we move into some of the other dashboards that we have coming up here. So I think the next slide or two will actually start showing us some of those benchmarks. And certainly, again, as Joe, you've mentioned, Mortarstone has some great stuff. Horizons has some great information. We work and have what we call our Church Financial Health Index, which takes a lot of the financial data and some of the giving data, and that literally creates these kinds of graphic, rich information around where are you. So, monitoring your debt, what's your debt load? Can you maintain that, or is it putting you at risk? And so we actually explain what those look like. So as recommendations, then we get into your expense ratios. We actually will, both give you what your own benchmarks, national benchmarks for salaries, occupancy, technology, et cetera. We'll do that against your own church, your own ministry over time. We'll do it against national benchmarks, and we'll do it against other peer churches. We actually even have this set up where denominations can do that within their own denominations, say, how are we doing as a conference or as a presbytery or a diocese, and how does that compare to other churches outside of our network of churches? And that's really important data. Again, monitoring expenses here, you can see where we recommend salaries of 40 to no more than 55%, mandatory debt services of 15 for interest, and then the combined, we really recommend you're below the 70%, because then those are kind of locked in. We don't want to play with people's livelihoods, their careers, hiring and laying off staff at will. And so that's really a critical piece as well.
Stan, thank you. We've come to the Q&A session of our webinar. We're going to end this portion. The Q&A, in which we answered 55 questions, is recorded separately. You can watch that as a separate download. For those of you that have been with us today, we hope that this was beneficial. As always, as the truth changes in regard to the PPP loan program, know that we are going to continue to push that information out to you and to help you as you seek to make disciples to transform the world. Thank you.